Good evening and welcome to the webinar for Nashik Municipal Corporation Green Bond Issuance. At India Bonds, we've always tried to bring all the issuers, the top management. But today is very special because given the importance of municipal bond issuance, which contributes to the growth and infrastructure of the country, just like you would have heard in the budget, the finance minister having special focus on municipal bonds, it's always important that our investors get to know what is happening here, which issuances are coming. If I compare to the US market, the municipal bond market is a few $100 billion. In India, we are starting this, and I have the great pleasure of inviting a powerful duo woman team from Nashik Municipal Corporation. Srimati Himgauri Balasaheb Aher is elected as the mayor of Nashik Municipal Corporation in the recently concluded elections. She's a background by background she's an IT engineer and MBA finance and more than a decade of involvement in various activities of the city. Also to welcome Srimati Manisha Khatri. She's the current Commissioner of Nashik Municipal Corporation and I.A.S officer of 2014 batch. And before being appointed to NMC, she has worked in various administrative initiatives of Maharashtra and very instrumental in doing Nasik's first municipal bond issuance in November 25 for 200 crores. And it is such a pleasure to have both of them speaking today and the platform to speak to all the investors about Nasik, which is a phenomenal city. A quick overview. It's a 100 crore plus 100 crore green shoe option bond issuances, very highly AA plus CRISIL rated, starts from 10,000 rupee denomination only. And it's really in a 3 to 10 year strip format. But to know more about, I'll welcome both our guests today. Madam, welcome, and it's an honor to host you in front of all our investors, all our retail investors. To all our audience, please type in your questions in the Q&A bucket. After a series of initial discussion, we will answer your questions. So I'll start straight away. So for individual investors watching today, can you explain green bond public issue by Nashik Municipal Corporation? What is being offered and why now?
Yes, Vishal. This is Himgauri, and the Nashik Municipal Corporation is issuing the green bonds for 200 crores. It is basically for the WTP works with the Mukane Dam and also for the pipelines to be laid for waterworks from Vilholi to Gandhinagar area and the WTPs for Nilgiri Baug and other areas. Now, basically, these works are and the platform of Kumbh Mela that we have in Nashik, which is hosted every 12 years, and it is in 2027. We also have a background to this because a scientific study was done prior to this, wherein there were water leakages like 47%, and this was a priority for the city that we take up water works as a very serious thing. And as a three-step, four-step solution-oriented approach, this was almost the fourth step that we had to do. And then our central ministry announced the incentivized structure for the green bonds. And that's why we thought this is the right time to issue the bonds. And with a coupon rate of 8.05 and a yearly yield of around 8.20, we are placing these bonds for the retail investors so that they can also be a part of it.
No, thank you. One question is, what is the maturity of these bonds? There are strips, right? So maturity starts from year 3 to 10. So if you can elaborate on that, that will be great.
Sure, Vishal. So this is Manisha Khatri, the Nashik Municipal Commissioner. So for the green bond issue of Nashik Municipal Corporation, we have divided the product in 8, different categories, where the maturity period starts after 3 years and up to 10 years. As you said, the minimum investment value is 10,000, face value is 1,000 rupees. So people and the retail investors have the flexibility to invest in for 3 years, 4 years, 5 years, similar kind of structure up till 10 years. And also, as these shares are tradable once after the listing is done, so these can be traded by the investors. So it provides a lot of flexibility, as well as a lot of safety and security, given the a lot of checks and balances that we have kept in the structure.
No, great. Maybe I'll just for our audience add. So basically, you invest 10,000 rupees, and 12.5% equal installments from year 3 to 10. And each year is a strip that you can trade separately in the secondary market. I move on to the next question. What led you to tap capital markets? How do you decide between bond borrowing versus government grants or bank borrowing? How do you decide that?
See, with the changing times, we need to change our modus operandi for raising funds, or the financial models that we have in the current scenario. Given that also the central government announced the incentivized scheme, wherein in the green projects or in the green bonds, whenever we raise 100 crores, a 10% incentive has been offered. And that's the thing that we thought that this would be the right platform. And also, including the retail investors was one of the things where people will have this contribution towards the Kumbh also, wherein the
Yes.
Nashikites are more interested and the world is looking at Nashik for being the Kumbh city, and people want to contribute in different ways, and this is one of the ways where they can contribute themselves for the Kumbh. Also, when we think of whether we go for the bank loans or other perspectives, we think that this is a very safe and secure kind of an investment, because in this uncertain markets currently, this is a certain and a very safe investment where we offer you almost uh, yield of 11 to 15%, wherein we are talking about that this is AA plus bond, where CRISIL and other India ratings have given this confidence, and we already have the escrow accounts created where we have got safeguarded the interest of the investors.
No, absolutely. At 8.2% annual yield at AA plus, today 10-year government bond yield 680. So you have a very good pickup from a government bond, 140 basis points. And also, madam, what about the incentive? I mean, there's a government incentive for bond issuance, right? Does that help you to take that decision? And what is it right now? Yeah.
Yeah, so as has been announced by Honorable Finance Minister of India during this budget session, that if a corporation or a local body raises around 1,000 crore of bond, they'll get 100 crore incentive. Similarly, for lesser bonds, so on same scale, pro rata basis, they'll get the incentive. So that is part of the Amrut incentive scheme, which is a major contributing factor for deciding that we need to go for the bonds. Because
Yes.
if we do that, then our effective rate of interest will be much less
Much
than
lower.
other bank borrowings or any other borrowings for that matter. And in addition to that, we also have newly announced Urban Challenge Fund scheme, wherein the government is proposing that for the infrastructure projects that ULB takes up, if 50% funds are contributed through such market funding mechanisms, then the 25% share can be funded by the central government of India, which again would effectively make this very, again, a steel deal for us, a very, very good fundraising mechanism, which will help us get a lot of funds from the center as well, and that's what we are looking for.
Very good. I'm on to the next question. Where exactly will the proceeds be used in Nashik? What projects are being funded? I know you spoke a little bit about it earlier. And what changes will the citizens see on ground, post this funding and the projects? Yes.
So the project is being the funds for that are being raised through this bond, green bond, will be used by Nashik Municipal Corporation in augmentation of water supply by creating water treatment plant, a big water treatment plant of 274 MLD in on Mukane Dam, and along with that we'll have water transmission lines, raw water and fresh water transmission lines, which will further reduce our leakages as part of slew of projects that we have undertaken earlier, and then this project. Our water leakages will reduce from 47 to 49% and will come down to around 15 to 20%, which is good global average. We will be saving water. We will become a water surplus city, which is very good and very important in today's time for growth, for proper and sustainable urban growth for any city. We should not become water stressed. That's the aim for next 20, 30, 40 years. So that is where the proceeds are going to move for. The work on this project has already started. It will be completed in a year's time. So we have earmarked these funds specifically for that purpose, which we are going to use and ensure that every penny is used in the right place for the right purpose and right cause.
Okay, thank you. It's written that it is a green bond, right? So, what independent validation ongoing reporting will you provide to support the green label? What is NMC going to do to make sure that it complies with the frameworks or reportings that are associated with it?
For the green bond certification, we followed all the circulars and guidelines of CIVI, and we have this bond has been certified by independent agencies to be green bond, because the purpose that we are achieving is sustainability, environment sustainability, water conservation, and for the compliances that are going to happen in future, we have third-party agencies, third-party audits who are going to check the compliances, the utilization of the fund, as well as that every information is put in public domain. So all such requirements have been met as per the guidelines of SEBI, for the same purpose.
Excellent. Okay. You have a provisional AA plus rating from CRISIL and India, right? So what are the key drivers? Because AA plus is very high. There are 10 notches for our audience investment grade ratings, starting from AAA, and AA plus is the second one. What were the key drivers that helped you to achieve such a high rating?
Yes, so Nashik Municipal Corporation is a surplus corporation wherein we have already raised funds through, raised funds in the sense we already have the surpluses from the property taxation and the other taxations that we have in the city. But provided we also need to use it for the infrastructure requirement that we have during the current pilgrim Kumbh stage. So when we thought of going for the bonds, and there were certain parameters through which we need to have the AA plus category so that the investments are safeguarded. We also thought that an escrow account wherein the entire 1 year's principal amount plus the interest is secured, and thereafter only the CRISIL or SEBI or the India ratings have come to AA plus. So it is a very safe investment. So every time when the property taxes or any income would come to the NMC, the first priority would be given to having provided the escrow account with the principal and the interest that is required for these particular green bonds sufficing, so that whenever the investor comes into picture, or the investor, since it's a age stripped kind of a model, which is third, fourth, fifth year till the 10th year, if anybody is trying to sell the bonds or get out of the investment, they will be having it along with the interest that they want or they have been promised with.
No, absolutely. I think people were asking in the audience. So just to tell you, a AA plus rating depends on the financials of any institution, and here in this case, NMC. So obviously there are capital surplus, as madam said, they are revenue generating, they have a lot of tax receipts. And the basis of the strength of the balance sheet is how you get a AA plus rating. It's not very easy to get one usually. My next question, in simple terms, if you can explain the escrow and the sinking fund structure, and how does it protect investors if your cash flows come under stress? I think you touched upon it a little bit, but just to reassure our investors, because municipal bonds is new in the country, हमें कंपनी समझ में आती है, गवर्नमेंट समझ में आते हैं, but for municipal corporation, how in spite of a very high rating, if you can just help us educate a little better, sinking fund structure, how does it work? How do you protect investors if there's a cash flow, fallen receipts or something like that for a corporation?
Sure, Vishal. First of all, there will not be any eventuality where we will not be providing what we are promising. So there will not be any stress for the investor. First thing, but to be double sure that we have provided safeguard mechanisms, I can enlist the features of this bond. NMC has provided escrow for its monthly revenue that we earn. We earn it in form of GST that we get, as well as for the property tax and other development charges we get. So we have escrowed the amount of the interest and the principal from our monthly revenue. So first, the monthly interest and principal amount goes in the escrow account, and whatever amount is left, that is later then used for the other development. So the amount of the investor is already gone in the escrow. Every month, it has become like already the process has been set, approved by SEBI, and being closely watched by the third-party auditors and the regulator. Secondly, for the sinking fund account, also similar provision that 1 year's interest payment and principal payment is going to be put in that sinking fund account from where the payments will be made to the investors. And we have also created a DSRA account for for the investors, because of which we got the AA plus rating as well, which is the major factor, that we had created fixed deposit FD of 1 year advance principal payment as well as 1 year interest payment. So that
Very
also is
interesting.
one additional security. So there are 3 levels of security: escrowing of the monthly
Yes.
revenue, second, sinking fund for the yearly payments, third, DSRA for one additional reserve of 1 year. So I think it's a very, very safe. I think we are very sure it's going to be a superb response given the safety we are providing, and we are cash surplus, as Madam said.
No, very good. Just for our audience, DESRA that Madam mentioned is Debt Service Reserve Account, where companies or issuers in this case are already pre-fund, 1 year interest payments or pre-fund maturity. So a lot of people are asking, what is a strip? What is an average maturity? Think if you're investing 10,000 rupees in a bond, then 12.5% of it, 1,250 will mature in year 3, 4, 5, 6, 7, 8, 9, 10. So average maturity is about 6 years only. But kya hai ki you have a surety of your invested amount at 8.2% and a very high rated credit. Yes, we will answer Q&A. A lot of people are writing, check the Q&A. My last question before we move to the audience Q&A, because I know you have more such meetings today. Public issue opens tomorrow morning. What message, would you like to share with other Indian cities? I'm sure in audience we have people who are following municipal corporation market. So, what message for other cities considering municipal bonds, and what readiness and governance it takes to actually go out and do a public issue? Because your last issue was a private placement. So, according to you, what governance, what readiness that a municipal corporation like yourself needs to be ready to go and do a public bond issue?
I think it requires a lot of willingness to do such a thing, because when we are mentally ready that no, we want this to be raised for this particular purpose, the funds are earmarked, and we have to see that it is implemented. Then, in that case, the best practices, because we have a financial discipline that is established across all the departments, as well as we get to learn a lot when we are, being monitored through SEBI and other guidelines that have been provided. And in the regular practices of the municipal corporation, we also get to learn a lot as to how a financial model or a particular bond when we are issuing. The various aspects, I think Madam has gone through an entire exercise
Yes.
with the administrative departments across, because the guidelines have been so stringent to, each department has to give their report card as to what compliances have to be followed.
So I think I'll just add on to that for other urban local bodies, municipal bond is a great market to explore. First, because it provides you financial independence, as in ULBs have to become self-sustained. We have to work for the city and contribute in its infrastructure growth. We cannot depend on the government, other governmental agencies to help us every time. So we have to become financially self-sustained. For that, we need to bring out innovative products, financial products, of which this green bond issue of Nashik Municipal Corporation is a very innovative product, as you've already discussed the features. And then it also provides us with the flexibility of getting incentivized from central government, which further helps our finances, further gives us more capital to work for urban infrastructure growth, which further will help increase our revenues and make us even more, revenue surplus. So it's a win-win situation for all, as well as for the investors, because it's very safe, secure. We are a well self-sustained, urban local body working for more financial transparency and good governance.
And also, there's a lot of trust involved, because
Yes.
we have Indian investors coming in. They know that their participation is there as a municipal corporation. So there's a lot of confidence involved with the local body along with the citizens.
No, absolutely. Thank you. So, trust is a very important factor when investing in anything, and I'm very glad that both of you have taken the time out, come to Mumbai. You're sitting in National Stock Exchange, and doing this for an investor call. To the rest of our audience, we have a program called Bond Street on CNBC, which India Bonds does, and tomorrow morning you will see both of them talking to CNBC TV. For the first time ever, a municipal corporation, mayor and commissioner on national financial television, on CNBC Awaaz and Thing talking about this. So this is really a time of change in the country, and I'm glad Nasik is leading it. I will go straight to the investor questions. I'll just repeat because the sort of similar questions come. Please bear with us. Our investors are learning about municipal corporation bonds. And so this issue is by Nashik Municipal Corporation. The total issue size is potentially 200 crores, 100 plus 100. Uh, it's a 10-year strip. By strip, I mean if 10,000 rupee you invest, you can start from as low as 10,000 rupee. 12.5%. So 1,250 will mature in year three. And same every year, you will get part of your principal back. It is very highly rated as AA plus. Madams explained how there is a debt servicing account, an escrow account where cash flows for the imminent payments are coming in. And the yield on this is 8.2%. The coupon is 805. Semi-annual is 8.2. So I will jump straight into questions. Is it 100% risk free? I will answer that. The only thing risk free 100% is Government of India issuance. And for that, you get paid whatever 6.5%, 7%. Bonds have a nature of risk. It depends on the rating. AA plus is a very highly rated bond. So, in amongst 10 ratings, the second one. So, yes, everything has a certain element of risk apart from Government of India.
But it is very safe.
It is very safe. Yes, thank you. Interesting question. Why have you timed the issue with Kumbh? How is the investor assured that it will be used for development of Nashik water that you're talking and not fund any Kumbh activity?
Yeah. So I think I would really want to explain that. Nashik has the history of providing very sustainable urban infrastructure to its citizens as well as to pilgrims and tourists who visit the city. It is the holy city, in the southern part of India. So the purpose that which we are using these funds are for creating water supply, water treatment plant and further water supply network in Nashik. And the funds are earmarked for that. So that project will also help us provide clean drinking water, pipe water to, during Kumbh to the pilgrims as well as for next 20 years to our citizens, to people who live in Nashik, to the Nashikers. So it's a dual, of course, it is water everyone needs, and providing basic clean drinking water is responsibility of every, urban local body, and that is what we are doing. So it's not really about this or that, it's about, yes, we need to do this project, we need to do it now before Nashik becomes water stressed like other growing urban centers. So we are in a very safe situation right now on which we capitalized and kind of decided to ensure good water supply for next 20-30 years.
No, amazing. So you're doing a long-term project. I think Kumbh is coincidental, but doing it the right time also ensures that the city infrastructure is great. Very interesting question. Are you proposing additional incentive for residents of Nashik for this bond?
So I think Madam can answer that. The incentive would be that, that I think the contribution will be...
Yeah, you're contributing. Yes, to the group.
Yeah,
But
you're
any answer to that?
There's a self-satisfaction, self-incentivized.
That's the best incentive.
Yes, no, that is very interesting. I'll move on to the next question. The first question, why we should invest in green bond despite normal bond? Maybe I'll just answer that. Green bonds are special because they are about infrastructure development and environmental friendly in the country. Usually when you invest, all kinds of investments is, there are a lot of people, there are a lot of funds who would like to do impact investing, that I'm investing, but my money is making a change in the world. And that's what drives people to green bond investment. The second question is from the same person, how we achieve CRISIL AA plus. He says, I know you answered, but I'm asking again because I could not hear you properly. So you achieved AA plus how? On what strengths of the corporation?
Yeah. So if, going very technically, if I would explain, then, we are cash surplus organization. From last 3 financial years, we have had around 600 to 700 cash surplus, basically revenue surplus, from which we have been planning our infrastructure works as it is. So that was one factor. Then low debt. Currently we are at low debt. Yeah, so our debt exposure is very less. So that was the second point. Plus we had other reserves also, cash reserves which are available with us in terms of fixed deposits. Third is that we have ensured, as I said, cash surplus is coming in at stable rate and stably increasing as required by the norms. So every year we are getting a good increase in our GST returns, in our property tax, in our development charges. So our revenue is also growing. So given all these situations, Nashik Municipal Corporation, I think, is in one of the healthiest financial state. We may compare to other ULBs as well, but I am sure that because we've got AA plus, we are quite strong on that side.
Thank you. There's a question I can answer. Please advise if NREs or NROs can invest in IPO. No, as per regulation, NRI, NRE cannot invest in IPO, but you can invest in the secondary market when it comes up for trading after listing. This question, madam, straight to you. Is there any risk if there are changes in the ruling party after 5 years?
Perfect question.
I don't see there is a risk as there won't be any change. I'm confident about it.
Yeah, but of course there is no risk because we've already safeguarded all the mechanisms.
Yeah. In the current uncertain markets, this is a safe option.
Yes. Interesting questions around guarantee, right? So why are municipal bonds unsecured? Why cannot it be guaranteed? Another question was why no sovereign guarantee? So sovereign guarantee to aisa hai ki, government of India does not do sovereign guarantees for a lot of things. They're very, very selective things, like state development loans, SDLs. There are one or two public sector old guarantees exist with the government, but the government does not do sovereign guarantee. It encourages institutions and corporations to rise on their own financial metric. But just to answer the question to you, can municipal bonds actually be guaranteed? And if so, do you know of any, or why is Nashik guaranteed? I mean, if you want to answer that question.
So generally, municipal bonds are unsecured. It's an unsecured debt instrument, which is the norm, and that's what we have followed here. But here, that doesn't mean just because they're unsecured, they're not safe.
Yes.
Because we have created DSRA, escrow, and the sinking fund account, and the overall revenue surplus. That's what the rating agencies do, and that's what the regulator does. They do check that how we are going to service our debt. So the debt may not be guaranteed, but it is definitely serviceable.
Yes.
And that is only when that's when we actually get the approvals.
So just to tell our investors, the idea is also to educate. You should definitely look for secured when you're doing a single A paper or a low AA minus kind of paper. But just to tell you, the AAA regulated or AAA rated large public sector companies in the country like PFC, RSC actually issue unsecured bonds because the rating and the balance sheet strength itself is so strong that creation of a security is not important. But in this case, you have a DESRA, you have an escrow account. So there are mechanisms to service that debt. That's how the market works. But do not invest in a single A paper which is not secured. So that is my.
And we are AA plus.
Yeah, exactly.
And we are going to service the debts.
Very, very, very clearly understood. One last question is how do you invest? Very easily. The bonds are already available on IndiaBonds. You can just go click. It takes 3 to 5 minutes, pay by UPI under 10 lakhs. And you can start being part of this journey of national growth, infrastructure growth, and municipal corporations. Madam, thank you. Any closing words from your side before we sign off?
Yes, definitely. Nashik Municipal Corporation welcomes all the retail investors to invest into the green bonds. The bond is available for investment from tomorrow, that is from 25th of February to 2nd of March 2026. So be a part of a very secured and safe investment for a green investment, which is for a very, very noble cause.
So thank you again to our investors. You can go on the website, IndiaBonds, and you can check all the documents, covenants. A lot of people ask me about questions on covenants. We also have an AI tool where you can question the covenants. You can watch both of them again on CNBC TV 18 and Awas tomorrow morning on Bond Street section. With that, Mayor Srimati Himgauri ji, Commissioner Srimati Manisha ji, Thank you so much for your time to talk to investors of India Bonds and reach out to your retail customer. Thank you, and we wish you all the best for the fundraising.
Thank you, Vishal.
Thank you.
Securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.